How to forecast the financial markets using the first Elliott Wave like a pro, part 1. How to forecast the financial markets using the first Elliott Wave like a pro, part 1. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders. And the title of this video is how to forecast the financial markets using the first Elliott Wave like a pro, part 1. This is an advanced trading tutorial for traders that want to master the market forecast like a professional Elliott Wave practitioner. All right. But before we continue, I want to clarify one very important point for our competitors. Okay. My goal is not, okay, to destroy, all right, Elliott Wave forecast service that are out there. My goal is to help traders to understand how to forecast the financial market. So for my competitors, traders or service, Elliott Wave forecast service providers, you do not have to worry about what we are doing on YouTube. I do not give to traders, okay, a real-time market forecast. I do not provide that service for traders for free. So I'm not competing with your service. All I'm doing here is to teach traders, okay, how one can sit down and learn, okay, to forecast the financial market. I do not provide wave forecast service for free, okay? So let's continue. So we want to teach traders, okay, how one can forecast the financial market using the first Elliott Wave, all right? So if you have been following us for some time, you will know that we have recorded 3 video tutorials recently. First step to accurate wave forecast, okay, second step to accurate wave forecast, and the third step for accurate wave forecast. I recommend to traders to watch that video at 24 Elliott Waves YouTube channel. In the first part, we were telling traders that one can use the first Elliott Wave to forecast the motive wave, right? In the second step to accurate wave forecast, we were telling traders that one can use the second Elliott Wave to forecast the corrective wave at the end of the trending phase or at the end of the motive wave, all right? In the third step to accurate wave forecast, we were talking about the Fibonacci, okay, retracement, Fibonacci extension, and the fractal pattern, talking about a predictive fractal pattern that one can use to forecast the financial market. But today we will demonstrate to traders how one can use the first Elliott Wave to forecast the motive wave. For traders that are very new or who are learning to master the Elliott Wave for the first time or market forecast for the first time, we want traders to understand this, okay? We have an Elliott Wave cycle. What is an Elliott Wave cycle? The Elliott Wave cycle is formed of the motive wave and the corrective wave. So the motive wave, this is what we call the trending phase, when the price will be formed, okay, of 5 waves: first wave, second wave, third wave, fourth wave, and the fifth wave. That's what we call the trending phase. First, from the beginning of the first wave out to the end of the fifth wave, this is what we call the motive wave or the trending phase. But the Elliott Wave cycle has no end, okay, does not end at the end of the motive wave, but the Elliott Wave cycle will end after the correction. So this is the beginning of the Elliott Wave cycle, all right? Beginning of the first wave, that's the beginning of the Elliott Wave cycle, all right? And the end of the corrective phase, this is what we call the end of the Elliott Wave cycle. So from the beginning of the first wave up to the end of the corrective phase, this is the Elliott Wave cycle, which is formed of the motive wave from here to here, that's the motive wave. And from this point where my cursor is to this point, that's what we call the corrective phase. So the Elliott Wave cycle is formed of the motive wave plus the correction. there are various type of corrective phase. I don't want to dwell on that, okay, because I don't want the video to be too long. So remember, when we are using the first Elliott wave, especially the internal waves of the first wave itself, to forecast the multi-wave, we want to know, okay, we want to use, okay, the structure of the first wave to forecast the multi-wave. Don't get confused, all right? I will clarify everything to you, okay? So here I have drawn on my chart. This is very important for me to draw things on the chart, because once you get the picture clear in your head, then you can now go to a chart and apply it. Now, as I explained to you before, this is an advanced tutorial for trader that wants to master, okay, Elliott wave forecast. So it's not going to be easy for all traders to master this method of market forecast, but it may take you some time. So give it a chance, practice, okay, and then you will get there, all right? So when we identified the first Elliott wave, we want to dissect, we want to isolate the internal waves of the first wave, all right? So go back or subscribe to our YouTube channel so you may understand the language that we are speaking here. What is an internal wave? A multi-wave can be divided into 5 manual waves. The manual waves are internal waves. So when the first Elliott wave is subdivided into 5 manual waves, we have 5, okay, internal waves that form the first wave. So I've drawn on my chart, here it is, from this point, okay, to this point. This is my first wave, okay? I need to draw a line first before we go to the chart so you may get a message. So from this point to this point is the first wave. You will notice that this first wave, which is the straight blue line, has been subdivided into 5 manual waves. The first manual wave, the second manual wave, the third manual wave, and this is the 4th manual wave, and the 5th manual wave. All those 5 manual waves formed the first wave. So when the first wave is clearly subdivided into 5 waves, this will help us, okay, to forecast the multi-wave, all right? Very, very important. Sometimes the first wave may not be subdivided into 5 manual waves. In that case, we need to go to a lower time frame. This is what I'm talking about. It will take more time, more experience to get there. But that's why I call this video the first part. So I will be recording another video and we'll be going a little bit deeper and deeper and deeper, okay? And then once we finish with our drawings, then we'll go to a chart, historical data, and then we will show trader why we remember this demonstration. And another time again, we will use a real live chart, and then we will trade lively, demonstrating to traders how one can use, okay, the first Elliott wave, okay, to forecast the multi-wave. So the first thing that we want to remember in this video is that the internal waves of the first wave can help us determine the shape and the form of the multi-wave. We also know that the multi-wave is formed of the first, second, third, fourth, and fifth wave. Therefore, we can also say that the internal waves of the first wave can help us determine the shape and the form of the second, third, fourth, and the fifth wave. So going back to my drawing here, this is my first wave that has been subdivided into 5 manual waves. Here it is. How can I use this information, the internal wave of this first wave of my drawing, to forecast the multi-wave? What is this structure telling me about, okay, the multi-wave? Okay, let's get started. So looking at this one here, so we see that my first wave has been subdivided into 5 waves, and this is the first manual wave that went straight up like this, okay? And then I see that I have the second manual wave in this shape. So by looking at the internal wave of my first wave, looking at the second manual wave of my first wave is telling me that the real second wave is likely to be in this shape and form. Are you getting it now? So look, this is my first wave from here to here, okay? And this is the second wave, the second mono wave of my first wave. Don't get confused. All right, it's the second mono wave of my first wave. Because the second mono wave of my first wave is in this shape, all I can deduct or forecast at this point in time is that the second wave, the real second wave of the multi-wave, is likely to be almost in the same shape. Doesn't mean it will definitely be in the same shape, but there is a high chance that the real second wave is likely to be formed in this shape also. All right? That's all we can say. But we will not assume that definitely it will be exactly the same thing. But we have an edge if the second wave end up exactly like this. All right? We have an edge because if we see it come down like this, the real second wave goes down and then goes up like this and start going down, we will know that there's a high chance that it will form this shape. So the second mono wave of the first wave will help us determine the shape and the form of the real second wave. Let's move on. Now we have the third Elliott wave here, which is not extended in my drawing. I'm talking about this drawing here. So you can see that my third Elliott wave is not too long. It's also helping me to understand that there is a high chance, not certainty, there's a high chance that the real third wave may not be extended. Please, this is not an exact science. So it's like a roadmap, okay, a guidelines, all right? We have that information, okay, we put it aside. Now we let the market do what the market wants to do, all right? So looking at the third mono wave of my first wave is helping me to understand that the real third wave is not going to be extended. But it doesn't mean that it cannot be extended. But with the information that I have from the internal waves of the first wave, at this point in time, looking at the internal waves of the first wave, I can be prepared or be ready to know advance that there is a high chance that the real third wave may not be extended. Let's move on. Now we have here the fourth mono wave of my first wave. Remember this: first mono wave, second mono wave, third mono wave. Now this is the fourth mono wave of my first wave. Look at the shape of the fourth mono wave of my first wave, the fourth internal wave of my first wave. Is a triangle A, B, C, D, E on my drawing here. With this information here, looking at this shape and form of the fourth mono wave of my first wave, I will be prepared and expect the real fourth Elliott wave to have a similar shape, A, B, C, D, E. This is just a high probability. The price does not have to be exactly that. But if the price, for one reason, the market shape it exactly the same, I have an edge. All right? So with this information, just knowing the internal wave of the first wave, I can focus, I can have, what do I mean by focus? I can have a bit of idea. Remember, this is the right way to predict or to focus in the financial market. It's about having a bit of idea what is likely, okay, to take place, not what is about exactly to take place. But we want to be cautious, we want to be prudent because the market can be distorted and the Elliott wave theory is not an exact science. But with that information, I am prepared and I have a bit of edge that there is a high chance that the fourth wave may also be in the shape of A, B, C, D, E. But I just put that aside and wait and see what the market will do. I will not rush. I will not become too arrogant. I will not jump ahead of the market and just expect it to do exactly what I'm expecting, but I will just wait. And if the market, okay, confirm my expectation, I will be on the right side of the market. So because the fourth minor wave of my first wave is A, B, C, D, E, I will be expecting the real fourth wave to be, okay, A, B, C, D, E. The shape and the form of the fourth minor wave of the first wave will give us a bit of idea of the shape and the form of the real fourth wave. Okay? And then we have the fifth Elliott wave that has been extended here. You can see that it's too longer. Looking at my drawing, you can see that the fifth wave, the fifth minor wave, is longer than the third wave. So here we see that we have the fifth wave that has been extended. So with this information, so I can expect that, okay, the real fifth wave of the multi-wave is likely to be extended. So first, my friend, pay attention. We are looking at each minor wave individually, paying attention to the shape and the form of each minor wave of the first wave. And at the same time, we are also looking at the, okay, how do I put this to you? The whole, is that correct? The whole, W-H-O-L-E, the whole shape, the bigger picture of the first wave. So you see the bigger picture is from here all the way here. So how does it look, the bigger picture? Okay, the bigger picture of my first wave is that we have the price went up, price pulled back, and then we have horizontal move and then extension. So the bigger picture, are you getting it now? The whole picture of the first wave is alerting us that yes, there is a high chance the third wave may not be extended, and the fifth wave is likely to be extended. The fourth wave is likely to be a shallow fourth wave, and the second wave is likely to be formed of three minor waves. All right? At the same time, we are also examining, okay, each individual minor wave of the first wave. What is the shape and the form of the second minor wave? What is the shape and the form of the third wave? Now, what is the shape and the form of the fourth minor wave of the first wave? What is the shape and the form of the fifth wave? Is the third wave extended? Is there an equality between the first and the fifth wave? Is the fifth wave extended? These are the verification that we are doing in order to focus the multi-wave, to have a bit of idea what is likely to take place during the whole multi-wave. Remember that the multi-wave is formed of the first, second, third, fourth, and the fifth wave, which is the trending phase. So it's great to learn and master Elliott Wave forecast, because by analyzing, okay, the internal waves of the first wave, all right, the first wave. So this is the first wave, so we see first. So you have consolidation, breakout, first wave, okay. So if the first wave formed of a 5 minor wave is a complex first wave, we will analyze, okay, the shape of the whole first wave, and we will also analyze the individual shape and form of each minor wave of our first wave. This will help us focus what is likely to take place, all right, during the multi-wave. So here I am. Suppose this is a real chart, and this is my first Elliott wave from here, okay, to here. Now this is the shape that I have. So what I will do, once I see that this is my first wave, I will now go back and look at each minor wave of my first wave individually. Now, okay, I'm a conservative trader. What I can do is to wait patiently. So I say, I'm expecting the second wave to be in this shape. It may be, it may not be, but there is a high chance it may be exactly that. But I will not assume that it will definitely be that, because the price can print something completely different. Now, we will talk about that in another time when we see a different picture. How do we handle that? That will be another conversation another day. But for today, if the price, exactly the price, the second wave, the real second wave, end up being exact in the same shape and form like the second minor wave of our first wave, we have an edge. So all I will do, I will just wait. So because I've seen now the internal wave of my first wave, I just wait. So the second wave is start printing itself, the real second wave start printing itself. At the end of the first wave, come down like this. So I'm saying, okay, general rule, the second wave should not cancel the first wave. Okay, now I see again, it went up like this. Now it start coming down like this. As it start coming down like this, I'm looking at the shape of my second minor wave, and I'm saying, well, there's a high chance this will print exactly that. I can trade it. All right. So if I see now that my real second wave, okay, shouldn't cancel it, okay, all right, it's in a shape like this one here, all right. So I see now, I say, okay, great. Well, this is what we are expecting. This is what's taking place here. So what do I need to do? I will now take advantage of this third Elliott wave here. I will be ready to take, to be ready, I will be ready to be part of the third Elliott wave that we are expecting here. And I will also expect the third Elliott wave not to be extended, not to be too long, not to be too prolonged. Looking at the whole shape, all right, of the first wave itself, all right. And if I catch my third Elliott wave and the third wave is underway, what do I expect? I will expect the third Elliott wave to be A, B, C, D, E. But my expectation is not exactly what the price has to do. The price may print something out that can be completely different from my expectation. But all I'll do, I may decide to wait and see. I may decide to wait and just see. So if I see first that my fourth Elliott wave begins here and then form, okay, went down first time, okay, all right, and then went up again like this. Here it is again coming down to the same place. Well, I will be thinking myself, well, it's forming the A, B, C, D, E. So when it reaches this level here for the second time, I may decide to take it, to buy here. And then if it come back here, I may expect it to come down. But I will use a top-down trading method, or I may wait completely until the A, B, C, D, E is completed. So I see now that my real fourth wave is almost equal to my expectation. Well, I will be ready now to be part of the fifth wave that is likely to be extended. Remember, this is not an exact science. This is a guideline that we follow. But the forecast, remember, this is what we are trying to clear out of the mind of traders, all right? The forecast is not an exact science. We have seen it. Real professional, experienced professional get too excited about the Elliott wave. They forecast and they say that this is exactly what is going to happen. I tell you so, it's going to happen, and the price will do completely the opposite. By using a top-down trading method and without assuming anything, one can avoid, okay, the Elliott wave traps. All right, you don't want to impose your wave forecast on the market, okay, and you don't want to assume anything. You want to go one step at a time, going back to your drawing board. What do I mean by going back to the drawing board? Each time you are going back to your forecast and trying to see whether everything aligns perfectly. But always remember, the top-down trading method will allow traders to manage their trade and the risks. It makes sense? So by using the internal wave of the first wave, we can forecast, okay, the shape and the form of the motive wave, of the trending phase of the Elliott wave. We are looking at the general shape and form of the first wave, and we are also looking at the individual shape and form of each minor wave of the first wave. Am I making myself clear? By the way, if you have any question, or I put in the comment section, I know that this is a bit, advanced tutorial. Put in the comment section, ask me a clear, question, and I will take note of it. I always read my comment, and in due course, we record video. This video that we are recording today is because traders are asking questions about Elliott wave forecast. That's why we are recording this video. So more questions coming in means that more video will be posted later on in due course to help traders to master the Elliott wave theory. I do not provide, Elliott wave forecast for traders for free, so my competitors do not have to worry about me. But if somebody, is learning about Elliott wave, but wants to understand what is taking place, because this kind of teaching is not widely available on the web, when they teach you exactly how the professional analysts forecast the financial market. Just by knowing the internal wave or the first wave, one can prepare oneself, one can be ready for, the next price move, all right? So the shape and the form and the structure, so to speak, the wave structure of the internal waves of the first wave will help us forecast, the wave structure of the motive wave. As I explained to you, this is not an exact science, it's a guideline that we follow, and we take it, we put it aside, we say, okay, this is my expectation, I just wait. If I see exactly that, well, I have an edge, and I will take advantage of it. But we do not try to go ahead of the market, and we do not call other market participants a mambo jumbo, because we have contrarian traders that may trade against you. It makes sense? It is also powerful. I want to move on very swiftly. I want to remove some of my drawing here, and I will continue with this essential advanced Elliott Wave forecast tutorial. I have seen recently some comment on our video that looks like my competitors start worrying a bit that, George, why can you give this information for free? Are you trying to destroy our service? Please rest assured that my intention is not to destroy wave forecast businesses, but to teach traders how to forecast, the financial market like a professional traders, So the more traders know about how to forecast the market, we may have an orderly market. That's what I care about. So they do not mess up our trade or waste our time when we are expecting, a specific price structure, all right? So don't worry. Next thing. Now, I have here another drawing on my chart. Here it is. I want to use another drawing on my chart. This is I love this because once you get a message clear, it's there for you and you can come back to it anytime. And when you go to the real chart, you start practicing, all right? Don't rush, Gently, not in one day, not in one week, gently, all right? Gently. Give it a chance, okay? So now, here I am. I have another first Elliott wave. This time from here to here. This is a second exercise. So this is the shape and the form of our first Elliott wave. How can we use this shape and form to forecast the multi-wave? Now remember, this is part 1. In part 2, I will be giving more information, all right? I will be giving you more tips and tricks that you can use, when you want to apply, the wave forecast for the first Elliott wave, all right? So let's try this one again. This is the shape and the form of another, first Elliott wave. How can we use that? What is it telling us about the multi-wave, all right? So we see the first wave like this. We say, okay, let's try to analyze each wave individually, all right? Because we already have the first wave, which is all the way down here. So we are looking at the second manual wave of our first wave. In this case, you can see that it's just a straight move down. This is a straight move down. So our expectation that the real second wave is likely to be a straight move down. Now, there are more to this to know how to filter out, trading mistakes here, all right? So all we can say that, it looks like the second manual wave is straight down. So there's a high chance the second wave is likely to be a straight down, all right? Look at the third wave. The third wave is quite extended. You can see it's quite long. If we compare it, what do you mean? How do we, with this information, we look at the shape of the third wave, we compare it to the first wave, we compare it to the third wave. So if the third wave is longer than the first and the fifth, we know that it's extended. All right, there are more to this, but we don't want the video to be too long. So looking at my drawing, and I compare the size of my third wave. So I know that, this third wave is extended. So now I can be prepared and also be ready that we are likely to see, an extended third Elliott wave, Remember, there is no extended third Elliott wave if the fundamentals are not solid, especially in an uptrend, all right? The opposite is also true in a downtrend. All right, we want to have weak fundamental during the third bearish wave. All right, so fundamental count during the third wave. All right, so here with the shape and the form of the internal waves of my first wave, I can forecast that the third wave is likely to be prolonged. Okay, great. So looking at the shape of the fourth manner wave of my new drawing here, we can say that the fourth wave is going to be shallow. It's going to be one move down, and that's it. Okay, so the shape and the form of this fourth manner wave of our first wave is giving us a bit of idea. This is what I want you to understand, a bit of idea. No certainty, no guarantee that the fourth wave will definitely be exactly the shape. Now, because I hear some traders say that the Elliott Wave forecast is just a mumbo jumbo, it's not. All right, because the market is dynamic and changing all the time. The reason why people say that it's a mumbo jumbo is because people are expecting something and something else is happening. Now, we can expect something, but we don't want to impose that to the market. So step back, all right? No arrogance, be humble, wait. Market will show you its hand. Use a top-down trading method, all right? So we will here looking at the shape and the form of the fourth manner wave of the first wave. We will expect the real fourth wave to be something like this. Does not have to, but if it is like this, use a top-down trading method, okay? All right? Then we look at the fifth wave. Here it is, it's down like this. We know also another Elliott Wave rule. This is what we talk about, the multi-talented trading. We are applying one rule, we don't want to forget everything else, okay? So, according to the Elliott Wave theory, when the third Elliott Wave is extended, what do we usually expect? We will expect equality between the first and the fifth Elliott Wave. Do you know that? Okay, all right, go back to our videos, all right? So when the third Elliott Wave is extended, there is usually equality between the first and the fifth. I don't want to dwell on this. Now, all I will do, I'll compare the shape of my first wave and to the fifth one. It's almost equal in my drawing here. Or I did it on purpose because I know this rule, okay? Generally, if the third wave is extended, this is something else, we will expect the fifth wave to be equal to the first wave. But sometimes it is not. So it's not a science, okay? Now you may notice that I'm using the word it's not a science because I know how some trader thinks, all right? They want 1 + 1 = 2 all the time. But in trading, 1 + 1 is not always 2. All right, that's what I'm saying all the time. It's not exact science, not to, all right? I'm not repeating it just for fun. I'm repeating it for a purpose, okay? So we will expect, okay, the fifth wave. So we see now, looking at the internal waves of my first wave, we notice that there is equality between the first and the fifth. So with this information, we will expect also the real fifth wave to be equal, okay, to the first wave. But the price does not have to be, the real fifth wave does not have to be equal. But this is just our expectation. Because the forecast, we are trying to, because we want to invest, okay, money is involved. It is great to know, okay, what is likely to take place. That's the purpose of the Elliott Wave forecast. So you will notice that JP Morgan, Goldman Sachs will pay Elliott Wave forecast business to give them okay, real-time forecast for gold or for silver or for S&P 500 because these okay, big market participant or a bank or a hedge fund may pay somebody to do a market forecast for them. All right, these are the service. And I'm not competing with these people, because I do not provide this service for free, but I teach traders for free how to do it. So if you manage to do it yourself, okay, it's your own. But I'm not taking customers from these people, all right? So relax, my friend, breathe in, breathe out, all right? It's you too, it's free, all right? It's free, okay? Okay, so with this information, okay, so the purpose of the Elliott Wave forecast, because we want to invest money, big sum of money, hedge funds, they want to have a bit of idea what is likely to take place. It's great to know, okay, the shape of the route that you want to take. So you are driving from A to B. If you know the route, you will drive better, isn't it? You know your expectation, roundabout, okay, curvy road, all right? So you will be prepared for that journey. The same thing, okay, market participants are doing. They are preparing for a journey, especially if you are a position trader, you want to remain in the market for some time, you want to have a bit of idea what is likely to take place. But it does not mean that the market will do exactly that. But this will allow you to navigate through the market more carefully. So suppose, my friend, we are here, All right, so we are expecting our real fourth wave to be just a move down like this. So suppose we were in the fourth area wave, and suddenly we see it becomes something like this. All right, so our expectation is, but we see something like this. So because we are expecting something like this, we know that there is a change taking place in the market. So what will go to our mind? We'll become a little bit more cautious and say, well, the forecast is telling us that the fourth wave should be shallow, but here we see something like this. What the market is telling us is the fifth wave is about to be extended again. What's going on? So we'll become a little bit focused. So the forecast is alerting us that there is a change in the market, and we are prepared to navigate through, okay, the change, the current market environment. Am I making myself clear? All right. So this is the first part of this video, and I want you to understand this very clearly. We are analyzing the internal wave of the first wave. So we want to go to www.24elliottwave.com, check Elliott Wave guidelines, check how to count waves. All right. And this will give you a bit of idea how to identify the first wave. Okay. So now you see the first wave. Okay, so you look at it, you say, all right, this first wave has been subdivided into 5 minor waves. So you check, you say, okay, well, what George was talking about, this mambo jumbo, George. All right, so you want to practice your wave forecast. First thing first, my friend, this is not an exact science, or I'm saying again, all right, it is a guideline. So you put it aside, your expectation, and what the market will do. As always, for trading, we are using the top-down trading method. The setup, the signal, and the low-risk entry point. I invite you now to follow me in the second part of the video, when I will be talking to you again about how to forecast the financial market using the first area wave like a pro, part 2. To summarize the video, we want to look at the general shape and form of the first wave, and also the shape and the form of each minor wave of the first wave in order to forecast, okay, the multi-wave. The area wave cycle is formed of the multi-wave and the corrective wave. And only the shape and the form of, or the price structure of the first area wave can help us predict the shape and the form of the multi-wave itself. All right? We do not assume anything, but we are waiting for the market to print our expectation, and when our expectation is completed, we will take advantage of the next price move. Sometimes you'll be surprised. One day you will see the price will repeat it exactly on the dot. Why? Because if hedge funds, all right, now let me clarify this before I close it. So suppose a hedge fund also did the market forecast, big market players, okay, big financial institutions did the same market forecast like you. All right. So why would we go through their mind? So suppose you have here, okay, Goldman Sachs, JP Morgan, big financial investors. We're expecting the market to form A, B, C, D, E here. What will happen at this point in time? They'll be willing to buy, yes or no. In an uptrend, they will be willing to buy. And here you are, ordinary trader, also expecting the same thing. And then the price print it out. Okay? Great, isn't it? Beautiful, isn't it? But don't go ahead, don't go before the big players. The market is now very, very complicated, and there are games that are being played in these markets. Wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about how to forecast the financial market using the first area wave like a pro, part 1. See you in part 2.